Hey, this is Max. Welcome to the Max Dividends channel, where we help people build growing passive income, retire early, and live off dividends. In every video, I break down one stock in detail, from business model to financial metrics. If this sounds interesting, definitely subscribe to the channel. There are many exciting analyses ahead. Today we're examining Visa, one of the most powerful payment networks on the planet. We'll answer key questions. How does this company make money? Is it a good stock to buy long-term? We'll walk through the Max Dividends checklist step by step, review the company's financial condition, see if it fits our dividend plan, and determine whether the stock is undervalued today. How this company makes money. Visa operates one of the simplest business models in the stock market. It doesn't lend money, take credit risk, or act like a bank. Instead, Visa acts as the toll road of the global payments economy. Every time a Visa card is used, whether swiped, tapped, chipped, or online, Visa earns a small fee for processing the transaction through its network. There are no factories, inventories, or debt risks involved, just a global payment infrastructure that thrives as the world transitions from cash to digital payments. Visa's revenue comes from three main pillars. First, payment volume fees. Visa processes over $15 trillion in payments annually, collecting fees from banks and merchants for every transaction, providing stable and predictable income. Second, data processing services. Visa charges for transaction authorization, clearing, settlement, fraud protection, and data analytics, which are high-margin services and form the backbone of its global infrastructure. Third, value-added services. This is the fastest-growing segment, including fraud prevention, tokenization for digital wallets like Apple Pay and Google Pay, instant money transfers, Visa Direct, and cross-border payments, which generate some of the highest profit margins. This model is simple, scalable, and built for long-term compounding, with high margins, low capital needs, and steadily growing cash flows. Is this a good stock to buy long-term? Let's walk through the Max Dividends strategy checklist, the simple steps we use to pick the right stocks. Step 1. Dividend history, our filter. Companies with 15+ years of consistent dividend growth. Visa clears this bar with ease. The company initiated its dividend in 2008 after going public, and it's been a perfect upward staircase ever since. Every single year brought a raise. No cuts, no freezes, no drama. From just a few cents per share in the early years to more than $200 per share annually by 2024. Over the last 15 years, Visa's dividend has increased more than 10x. The 5-year dividend growth rate sits comfortably in the 15 to 20% range. The most recent increase came in late 2024, another double-digit raise. Step 1 passed. Visa is a proven dividend eagle with 15+ years of flawless dividend growth. Step 2. The 5-pillar secret formula: sales growth. Foundation of strong business. Over the last decade, Visa has delivered remarkable consistency, from roughly $13 to $14 billion in 2015 to more than $32 billion in 2024. Revenue has more than doubled with no sharp spikes or erratic drops. What drives this? Global payment volume growth as trillions shift from cash to digital. Cross-border momentum from travel and e-commerce, and rapid expansion of value-added services. Year after year, more payments move through Visa's rails. Sales growth passed. Visa's revenue engine is durable, global, and built on secular trends. Profit growth. Fuel for dividend growth from roughly $11 billion in 2015 to more than $26 billion in 2024. Visa's operating profit has more than doubled. The company regularly posts operating margins above 60%, among the highest of any large company in America. This comes from a pure asset-light model with no lending or credit risk, pricing power without friction, explosive cross-border growth, and high-margin value-added services expanding rapidly. Profit growth passed. Visa's combination of scale and asset-light operations produces one of the most durable profit engines in the market. Net income. True measure of strength. Net income climbed from roughly $6 to $7 billion in 2015 to nearly $20 billion in 2024. A smooth, steady rise with almost no volatility. Even during inflation, rate hikes, and global disruptions, Visa continued posting strong profitability. Net income passed. Visa delivers rising, reliable earnings year after year. Dividend payout safety, protecting passive income. Over the past decade, the payout ratio has consistently remained in the 20–25% range. That's unusually low and extremely healthy. A payout ratio below 30% protects the dividend in every environment and provides runway for long-term growth. Dividend payout safety. Visa's low payout ratio makes its dividend exceptionally safe and built for consistent growth. Debt burden, avoiding financial traps. Visa's debt ratio has remained stable, generally ranging between 0.45 and 0.60. The company takes on debt strategically for buybacks, acquisitions, and expansion, but generates enormous free cash flow that easily covers every obligation. Debt burden passed. Visa operates with disciplined leverage backed by massive cash flow. The company financial condition. Financial score, 99+ out of 99. This is the highest possible assessment, rock solid and built to last. By our 5-pillar secret formula, Visa stands out as one of the most dependable dividend eagles in the global payments industry. Step 2 passed. Visa is a proven dividend eagle with elite long-term fundamentals. Does it fit my plan? Not every dividend stock serves the same purpose. That's where max ratio comes in. It shows whether a stock belongs in your portfolio as a growth play, balanced compounder, or income leader. Visa comes in with a max ratio of 3.69, dividend yield of 0.89%, and 5-year dividend growth rate of plus 105%. This places it firmly in the Growth Eagles category. Max ratio under 4. The starting yield may be low, but the pace of dividend growth paired with exceptional financial strength makes it one of the most reliable long-term compounders in the market. Visa doesn't pay much today, but it raises fast. Is the stock undervalued today? Cheaper than competitors? According to the Max Dividends app, Visa currently appears overvalued compared to peers. Investors are paying a premium relative to other companies in the payment sector. Cheaper than its own history? Neutral. Visa trades at a PE of 32.35, almost exactly matching its 10-year average of 32.6. No discount, but also no premium. Better yield than usual? Yes. Current yield of 0.82% is above the 10-year average of 0.67%. Investors buying today lock in a better yield than usual. Analyst consensus Visa trades around $321 per share, while analysts target $394, implying roughly plus 23% upside from current levels. Final decision. Visa meets my highest standards for a long-term dividend compounder, world-leading business model, exceptional financial strength, consistent earnings expansion, flawless dividend growth record, and one of the safest payout profiles in the market. With a max ratio of 3.69, Visa lands in the Growth Eagles category. If your plan includes owning world-class compounders that steadily grow your future income, even if the starting yield is low, Visa fits that strategy extremely well. For now, I'm keeping it on my watch list, waiting for a more attractive entry point. But make no mistake, this is a company I like, respect, and fully trust to handle a portion of my long-term savings. The same methodology I applied to Visa works for any stock. And the best part? Everything is already integrated into the Max Dividends app, financial ratings, max ratio, lists of top dividend eagles. If this analysis was helpful, support with a like and subscribe to Max Dividends. Remember, this is not investment advice. See you in the next analysis.